Hey everyone, Brian here. The new issue of the European Financial Forecast is online. I want to start with this chart. This is the alternative investment market at the London Stock Exchange. So small, high beta shares that we use to get a feel for psychology, right? Are investors feeling conservative? Are they feeling speculative? The AIM 100, if you don't know, has been quietly collapsing since really around 2021. Despite recent highs in the FTSE, there's a couple ways to view this. It could be that the AIM is signaling this deep-seated pessimism and that the FTSE is climbing that proverbial wall of worry. It could also be, and I think it's more likely, that the speculative intensity just keeps draining out of the UK markets. I base that view not only on the wave structure in the FTSE, but also on the refusal of new companies to list their shares in London. Either way, there's a support shelf here that I think is important. It dates back to the financial crisis. If we break it, prices are going to likely take out their old lows, and I would view that as a very bearish sign for the market as a whole. Now, I'm bringing this up because there's a lot of other gauges suggesting that investors are quite complacent. This one is the German DAX relative to its own implied volatility. So this chart is a ratio. It's opposite to how we typically view volatility. A low on this chart signals crisis, right? You can see '08, you can see 2003. High levels signal complacency. So by this metric, we're not seeing that wall of worry at all. We're seeing levels that are 2 to 3 times higher, right? More complacent than what we saw at previous tops in the market. And this matters in my view because investors are ignoring that indexes of smaller stocks are still lagging the large caps by a wide margin. This has been the case really since 2021. We've got here British and German mid caps way down over nearly 4 years now. Small caps in Germany essentially flat. What we want to see in a healthy bull market is confirming price action. And instead, we're seeing the kinds of diverging price behavior that typically occurs at a market tops. Now, one final chart to point out, stocks in terms of something whose value remains stable. This is the Stock 600 in terms of gold. Gold's a great yardstick because it just sits there and maintains its value. April 9, Stock 600 fell to its lowest level since 2011. More important, we've broken a couple of support levels here. In our view, most investors really just don't appreciate the loss of real value that is happening in stocks. In essence, the nominal indexes are only rising due to a depreciating currency unit. There's a lot more to say about that inside. So enjoy the letter. Thanks for reading. Thanks for watching. And I'll see you in the next video.